Our house view is really that, there's going to be quite a bit of volatility in the next 6 months. Brexit is still playing itself out. You've got elections happening in Europe. You've got China still, under the weight of a lot of debt. You've got the presidential elections in the US coming up. So quite a bit of things happening in the next 6 months. That's going to create a bit of volatility. The markets are probably going to trade in a range. But bear in mind this, central banks have already done a lot in terms of monetary expansion. It has produced some results, but there's also a lot of money sitting on the sidelines. I think if you look at fund managers, global fund managers, typically they're sitting on quite a bit of cash at this juncture.
They're scared, aren't they?
Well,
they're playing safe.
Well, I think they're taking a more defensive posture at this juncture with Brexit and everything else. But all that cash on the sidelines will come into play. The markets see a decent pullback. 10%, 15% pullback, the markets come back. I mean,
on what gauge? On what measure? What are we talking about? 10% pullback in what?
Well,
the S&P?
On the S&P 500, on the MSCI World Index, if that measures global equities, I think for most indices...
Do you think we will?
Well, I think it depends on how Brexit plays out. It depends on what happens in Europe. If there are concerns that, the European project is going to fail, we see more unhappiness, resentment, anti-EU feelings. So
specifically, what could be the trigger for that 10% pullback in MSCI World?
Well, I think it's got to be something that is quite significant in terms of, affecting global growth. The way I see it, if markets start worrying that Europe is going to fall apart, if the sentiment starts getting worse, and people think that the European economies are going to pull back sharply, and that's going to affect the US economy in turn, second round effect. I think then people are going to worry about global growth, and that could be a trigger for pullback.
Okay, that would be a buying opportunity as well for all the money sitting on the sidelines.
That's right. I can think of other triggers as well. For example, the Chinese currency started to weaken. If it weakens substantially, then markets are going to worry about another round of devaluation of the Chinese currency, capital outflows. That could be another trigger as well. US presidential elections, if there are indications that Donald Trump is making headway,
that could be a third trigger.
That could be a third trigger.
Regardless of what the triggers, if we do see MSCI World come off, say, 10%, right? Opportunity to buy, what do you buy?
Well, I think at this juncture, we feel that there's really value in Asia. I mean, Asian markets are probably going to see a bit of turbulence because of Brexit, because of the strong US dollar. But, Asia has been an ignored region for such a long time. The last 2-3 years, Asian markets have underperformed. If you look at valuations for Asian stock markets based on the MSCI Asia ex-Japan index, it's trading at about 11 times, 12 times versus, the MSCI World of maybe about 15, 16 times. So it's trading at a discount. So we think there's value in Asia. Fund managers are underweight the Asian region. It's just fallen off the radar screen of many fund managers. But I think, people are starting to see value. And on a good rebound, on a good pullback, I think that region could actually pull back quite nicely, given it's seen as a risky region. On risk aversion, it pulls back probably more. And that's buying opportunity, the way I see it.
Even cheaper entry point, what they're saying.
That's right. It could get even cheaper, and more value could emerge, as a consequence.
Wow.